Let's start with Apple. Why do I want to own it right now?
Well, you want to own it now if you're patient enough to own it for the next 3 to 5 years. This company's obviously been a horse for the last decade, and they've embedded 1 billion units globally. And yes, units are going to slow down just because as the device matures, you have less and less reason to upgrade. But with that billion devices globally, you have this embedded services revenue that's going to be kicking in and continues to kick in. And as this moves more and more away from just a product company to more of a services company, the multiple should rise. But it's going to take some time here. We've seen the stock come down, as we all know, $50 from the peak of less than 2 months ago. But it's a stock you want to own for the long term.
There are perceived risks around what could happen with unit sales going into the next couple of quarters, Mark. In your view, is that something that adjusts over quarters or over several years now?
My sense is that this is a theme that will play out over the next, not just few quarters, but probably over the next few years. This will not be a story where they're going to beat units substantially over time unless we see some huge innovation for the phone, which I just frankly wouldn't expect. You'll see better quality, you'll see better battery life, you'll see better things on the phone, but just in terms of design, it just doesn't feel like the next 3 to 5 years you're going to see a revolutionary design. But that doesn't mean you're going to want to not own the stock. I think as you get more and more into that services and the amount of time you spend with that phone, paying for things, listening to things, watching things, your health, your home, your entertainment, your car, etc. I think that's more and more reason this turns into a services company. It is not an expensive stock relative to its growth rate, and over time that will be beneficial to the shareholders. Right now it's just painful as you see these numbers come down for the units.
Well, I guess, Mark, it's not an expensive stock relative to the growthiness of the one side of the business. The problem is that you put a valuation on Apple based on the larger chunk of the business, which is the iPhone side of it. And Mark, for Apple, when do they actually get to a position where services is material enough that I have to think about a different multiple to put on this company?
You know, it's a great question, and I think it's more about the perception as well as the discounting of that rate. And you look at a company like Microsoft, which forever was just tied to the PC and was tied to the growth of the unit volume in PCs, and it took a long, long time for Microsoft to churn its way to be more of a services company, more of a cloud-based company. And look at that multiple exploded. That stock kind of went sideways for a long time, and watch as that multiple exploded over the last 3 to 5 years. I think we're in that phase for Apple where they're going to just have to digest this time and this phase of lack of upside just from units. But again, if you figure out where you think that inflection point comes from the services revenue, and that's probably 3 to 5 years down the road, you discount back a couple years, we're probably not that far away. There's also that specter of China that lingers over Apple that I think we haven't really discussed, which is they're tied to manufacturing there, and these trade wars, which overall are obviously problematic for the market right now. Until we digest that and figure out where we're going with that, the specter of that China relationship lingers over Apple, and until we get clarity, we're going to have a problem with the stock.